Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Tuesday, October the 25th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live sessions to put our trade plan together. We take a look at the market macro to micro, drill down to the trade levels and the targets and our hypotheses for the day. We do create multiple hypotheses because we do not know what the market's going to do, but we're going to put a plan together so that we have a plan of action based on whatever the market throws at us. This is a subscription service, so if you're looking to check us out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live in the go-to in these morning sessions, and then we do live trading and analysis during the course of the trading day. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, taking a look at yesterday. Yesterday was a gap up day. We gapped up, and our main hypothesis was a move back to the 40 and a quarter. Half gap fill, and then a rotation back up and continuation and a move up through to that CHVN and the microcomposite VPOC on the longer term up at that 53. We did gap up and we came down and we started, they started the buying, but it stalled out in around the key line in the sand, the 44.50. And this is a very, very, very good example of long-term price rejection turning into short-term price acceptance as the buyers and the sellers try to take control of the direction. So what happened yesterday is basically they came down and the sellers were trying to keep us below the 44.50 and push us down into the balance that we just gapped out of, and the buyers were trying to hold us above the 44.50 and get continuation up into the longer term price acceptance up there at 53. And what happened was there was no OTF involved, and they basically stalled out and they tested both sides of it, and we ended up shifting the VPOC on the day to the 44.50 right at that inflection point. This is going to be a key inflection point. What happens from here is likely going to point to the bigger move out of this area. So just keep that in mind, that and just to take a look at that a little bit better. There's your gap up. We gapped out of this balance area down here and came and we battled this 44 area and basically chopped on both sides of it, ended up with a bit of a doji day, left the gap behind. So let's just take a step back, take a look at the news first. We do have news coming up in 5 minutes. We've got HPI and CS composite 20-year HPI, and then 10 o'clock we've got CV consumer confidence, IBD tip economic optimism and richer manufacturing, and then we've got the Bank of England Governor Carney speaking at 10:30, and then Draghi is going to be speaking, the ECB president, at 11:30. So a lot of news this morning. So just any one of these can move the market from the CV consumer confidence, the Bank of England, or the ECB speaking can make this market move. So just be aware that it's not just going to be the U.S. news. It's going to be the European and the UK news as well. Taking a look at the macro to the micro, we've got this possibly falling 3 pattern on the monthly. You've got a big bullish candle, then you've got 3 falling candles, and it'll be interesting to see how it sets up if we get a bullish engulfing candle on the other side. This is a classic continuation pattern. It's called a rising three or a falling three. A falling three usually is continuation higher. But the overall trend is still intact on the monthly. We're getting slope and separation after challenging it on the end of 15 and beginning of 16. On the weekly, we're still trying to get and hold above the 9 and the 20 on the weekly. This is a consolidation pattern, a symmetrical triangle, and we could break to either side, but it looks like we're going to break to the upside. On the daily, you can see yesterday we got back above the 9 and the 20. That's the first time in over 8 days that we've gotten back the 9 above the 9 and the 20. We did take out that naked cross at the 46, 47 area, and then overnight so far they've held that. We went up and hit that 49.75 Globex high, just slightly 3 ticks higher than the RTH high, so we are seeing some strength coming in on the daily. On the intraday, you can see that the trend is starting to the upside again. We do have a naked cross down here that we left in the Globex Sunday night at 36, but the trend itself is up on the 4-hour. On the 1-hour, you can see that we kind of stalled out, but we're still above the 20. We're trying to hold above the 9 right now and fighting it, but we haven't violated the trend. We don't violate the trend until we get below the 45 area. Going to the 30-minute, you can see that we did break down earlier, and now we're coming back up, and we're trying to hold the 9 and the 20. This could be also a rising 3 pattern. If this candle turns out to be a big red candle, this could mean that we're going to get a move down back towards that 40-50. Completely the opposite to that monthly rising 3. Going to the 15-minute, you can see that we do have a bit of a downward trend going on right now, although they're trying to take it back and likely come back and test that 44.50 in my mind before the end of the day. And then on the 5-minute, you can see we've got a consolidation pattern going, and we're trying to hold above the 20, but we're failing right now. So we've got a little bit of weakness coming in on the shorter time frames, but that's just basically oscillation. Again, the most important level to watch is going to be this 44 area and whether or not we can hold above it. If we can hold above it, I think the buyers are going to continue to stay in control, and we'll get continuation up into the 53. If we get below it and we do not bounce off of the 40-50, then look for them to come back down into that 35, 36 area and come back into this balance. The value area low is basically sitting at 2139 on the longer time frame, and then the shorter time frame, the balance that we just broke out of, is at the 40.25. That's about all we really need to know on there. We have had a pretty tight overnight session. We do have a bit of a weak low here at the 44. Our Globex low is 43.75, basically put in just after the open, but we came down here twice to this 44 and bounced from there. Our overnight VPOC is 47, and our overnight high is 49.75. So taking let's just take a look at the news here. I want to just keep abreast of news this morning. So CS composite came out as expected, 5.1. And then put this news out. I'll just keep an eye on it. off to the side here. So our overnight high is up at 49.75. Our overnight low is down at 43.75. Our VPOC is not likely to shift, 47. Sitting right on top of that value area high from yesterday. And that's really, we've got a case of balance from the overnight session. So not much, pretty tight range as well. Our 20-period ATR on the daily is running at 2051. So 2143.75 off the bottom, 2051 puts our upside daily ATR up at 64.25. And off of the overnight high, 2149.75 minus 2051. Our downside daily ATR is down at 29.25. And we don't really have to worry about our weekly yet. So taking a look at our levels, we have very strong balance. Obviously, the 47 is going to come into play here. The value area, we have very strong value area, and we're fighting the value area at the VPOC overnight. And then we've got the 49. This sets up pretty straightforward. And then we've got the 59. That's our warning line, and then all our levels to the upside. To the downside, we've got our key line in the sand here. I'm going to use the overnight low at 43.75, and then I would be targeting the range low from the RTH session yesterday at 40.50, and that's CHVN. And then all our levels remain the same to the downside. The next big target is still down here at 35. So our two main targets today is going to be either 35 or 53, whichever we get to, based on whether or not we hold above or below the key line in the sand, which is going to be that 43.75. So hypos. Hypo 1 is an open auction, in range, in balance. They move down, test the 44.50 to 43, and then somewhere between the 40.50 and the 43, I'm looking for responsive buyers to step in and rotate us up through that key line in the sand, through value, break out, take out the overnight high, and push through into the 53. Chop around in the 53 and maybe come up and test the 59 area today. Maybe even up into the 62. We do have range capabilities to get all the way up into the 62, 64 area. Hypo 1, open auction in range, a move down, find responsive buyers between 43.75 and 40.50, rotate us back up through, chop, get up into the 53, and then make a late day probe up into the 59, maybe 62 to 64 area. Hypo 2 is opposite of that, open auction, in range, in value, a move up and a failure or a false breakout, or even a move up into the 53, but somewhere between 49 and 53, finding responsive sellers and rotating us down through, testing the 44 and breaking through and pushing through down into the 35, maybe even all the way down into the 29 on a late day probe. So basically opposite hypos based on those two targets of 53 and 35. Hypo 3 is another balance day, and basically chop between the 53 and the 40.50, and just basically chop in this area and get a very rotational day. Hypo 4 is an open auction in range, a push up into 53, and then get continuation, break through the 59 and push up into the 66 and get a trend day up into the 70s. I find that this one's probably lower probability, but it is something we have to consider. And then there's going to be a fifth hypothesis, which is basically a breakdown and a failure to get above value, break down below the 40, push down into the 35, and then fail and push all the way down into this 2050 area. And that's low probability too, but again, we've got to be prepared for those possibilities. Anyway, that's going to complete our pre-market session. I want to keep this short because we're running late. We're currently below the Keltner center line and coming down and testing that 44.50 area. Likely going to chop in here until we get into the open of the RTH session. That's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.